Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are. Thanks for joining us. Today, we're going to be talking to Raf Pritchard, who's the Executive Director of triResolve within the TriOptima business, about the collateral management industry, something which is becoming increasingly important to all sorts of firms. Raf's going to talk to us about how his company have helped customers tackle the changing challenges of collateral management. Before we do that, I would just like to congratulate Raf and his team for winning the Collateral Management Solution of the Year award for 2020. That was one of our FOW International Awards, which were awarded at the end of last year. So congratulations to Raf and the TriOptima team for winning that award.
Thanks, Luke. And thanks for the award and the recognition and the opportunity to come and talk about it. I'm Raf Pritchard. I'm the head of the triResolve business globally at TriOptima, part of CME Group. And TriOptima's business is post-trade software services for OTC derivatives, providing risk mitigation, efficiency, and automation. And our services are related to one another, and they grew out of each other. And the margin service is one of our more recent ones, and it's in a competitive field, so we're very happy and proud to win the award, Luke. Thank you.
Okay, and we're very happy and proud to award the award. So thank you. But so Raf, let's talk about collateral management. I mean, you've been embedded, you've been dug into collateral management for many years now. Could you perhaps, just to start with, could you describe the collateral management landscape for us?
Sure. To start at the beginning. The purpose of collateral management is credit risk mitigation. And in the context of derivatives, they may be listed or cleared or bilateral. And those respective markets trade many of the same asset classes, instruments, and currencies, though with their differences. And each of those markets has its role to play. TriOptima's origins and our focus in collateral markets and collateral management is on that bilateral market. An obvious characteristic of which is that you face your counterparty over the life of the trade. And this, with thousands of participants in the market, there are then hundreds of thousands of trade and credit relationships. And that creates an opportunity for central services to automate that credit risk mitigation process. I'd also say, aside of that obvious application to the bilateral relationship, there's also a broader trend in post-trade infrastructure towards central automation, a centralization of data and processes. And this is really driven by the compelling structural cost savings of central shared software services over local individual ones. Lastly, I mentioned obviously the regulations. The unclear margin rules are now in place for the bigger participants, but they continue to drive investment in automation for the larger numbers of mid-sized and smaller firms in scope for the later phases.
Could you perhaps talk to us about triResolve margin specifically, Raf, and so how does triResolve margin help clients tackle some of the challenges that you've just described?
Well, if it's maintained in a timely and accurate way, collateral is extremely effective at credit risk mitigation. So put very simply, what triResolve margin does is it calculates the collateral requirement and communicates with your counterparties, and then provides an exception management workflow. A little more specifically then, the basis of that collateral calculation is the credit agreement, the trade and portfolio data, and the collateral balance. And the resulting collateral call is then communicated with the counterparty over the AcadiaSoft margin sphere message network. And all of that automation then frees up the time of the collateral management team to focus their efforts solely on resolving any breaks and exceptions from that automation process. And triResolve margin provides a workflow dashboard for doing that. Since we launched it in 2016, triResolve margin has grown to become the market-leading shared central collateral management service with over 240 participants active from around the world.
Raf, could you perhaps explain to me how TriOptima and triResolve margin, the various services that you offer, are different from the other collateral management services that are out there in the market today?
Yeah, I'd say it's our track record and our integration and our scale. TriOptima has been innovating post-trade services for 20 years now, starting out with multilateral termination, portfolio compression, and then portfolio reconciliation, credit analytics, and most recently, margining. And we didn't invent those processes, but we have centralized them and automated them in a way that's never been done before, and that has provided significant scale, efficiency, as well as agility to the market. And an example of that scale is the underlying triResolve network and the integration with that. An industry standard, live since 2007, triResolve reconciles over 90% of bilateral derivatives globally. In so doing, it provides fundamental integrity around the trade populations that constitute that credit risk. And it does that by being a shared central network where firms can reach and maintain agreement about their trade populations, the key trade terms, and the daily valuations. And that data is the basis of the margin process and calculation. And the unique thing we have done, which ensures effective margining, timely and accurate results that are agreed by both parties, is we've fully integrated the exception management of that margin process with the underlying data reconciliation. And that scale is important in one more way too. That broader trend towards central automation depends on it. Having solved for reconciling centrally 90% of the bilateral derivatives that are the inputs to the margin process, that positions us uniquely well to scale our similarly central margining solution to meet market needs.
And you mentioned that TriOptima has been providing services around collateral management for 2 decades now. Perhaps you could, sort of looking back, reflect on how has the service evolved over time?
Well, that underlying triResolve network has grown organically since inception in 2007. We started out with the dealers as they faced so much of the bilateral market. But as we established the network, we worked to add the mid-size and smaller financial firms, and then the buy-side, hedge funds and asset managers, and then really just continue to grow the service organically over time, adding the broader, diverse market participants, such as sovereigns or insurers, pension funds, and corporates. And in parallel with that growth of the subscribers, and in response to the needs of that broader customer base, we also grew the service, for example, adding support, reconciliation support for other similarly margined asset classes, such as bond forwards, repos, and client cleared. It was logical then, 5 years ago, for us to launch our margining service as it works off the same data. And that experience of solving for a central shared reconciliation service for the broad market, the diverse in terms of the size of corporation and the type of company and the volumes and the automation appetite or onboarding priorities, etc., but solving for a shared service for all of those different types of participants was key in how we architected and designed our margining service to provide a similarly shared central solution. One other thing we can see over time is that broader trend towards central automation. For example, if we look back at where the bilateral market, how the central credit risk reconciliation was back in the last crisis in 2007, compared to now, back then, triResolve was already launched and we had around 50 participants in the network when the Lehman weekend happened. And we can clearly see the progress in central automation with around 2,000 firms sharing the same network today, once to orders of magnitude more when the pandemic-related volatility spike and volume surge and associated credit risk scrutiny occurred last spring.
How has, obviously, the last few years, I mean, you mentioned the financial crisis of sort of 2008, there's been a huge amount of regulatory change over the last sort of decade or so. How has regulatory change affected the services that you provide and your client's approach to collateral management?
I mean, clearly, as you say, Luke, regulations are a central driver of the post-trade infrastructure, especially around collateral. But I would say it's just worth noting that collateral management in the form of variation margin and its associated automation has been an integral part of the OTC market since its inception, well prior to the regulations. But an obvious example of where the regulations are driving the market is initial margin, with the uncleared margin rules mandating two-way posting of initial margin by really quite a broad range of participants. And in response to that, and as an example, I think, of that agility of central services, together with the industry and in collaboration with AcadiaSoft, we developed and delivered the initial margin exposure manager, enabling firms to reconcile the inputs to and the calculation of that initial margin. And another thing we did in response to the regulations about the same time was we expanded our TriCalculate credit analytics XVA service to add an additional separate service, providing the SIM trade sensitivities that are the inputs to that initial margin calculation.
And Raf, looking ahead to 2021, perhaps you could tell us what we should expect to see from TriOptima over the next 12 months or so.
Well, we're continuing to develop that margining service. One area is those similarly margined product types. We added to the reconciliation service. We're also incorporating them into the margining service, such as listed and client cleared and repo. We're also developing the overall automation. We're working on margin interest. And one thing we're very excited about is to have gone live on our Swift integration. This uses CME Group's proven Swift technology to allow firms to automate the communication of the agreed margin movement to their custodians and other service providers. In common with many in the industry, we're also very happy to be helping numbers of firms in phase 5 and phase 6 of the uncleared margin rules prepare for the initial margin deadlines coming up in September of 2021 and 2022. And then in closing, really, I'll come back to that broader trend of central automation in the market. Also, on the one hand, it's really compellingly more efficient for standard applications that are in use over time for the market to share common central software services. On the other hand, for firms that already have local, individual legacy solutions, it requires some investment and rework to move to that shared approach. And across a broad, diverse market with a large number of participants, for all of those individual firms to get round to prioritizing those investments, that really takes quite a long time frame, certainly much longer than the last deadlines of the current unclear margin rules. So overall then, between the short-term deadlines and the longer-term trends, we expect to stay busy.
Raf Pritchard, Executive Director of TriResolve. Thank you very much.
Thank you, Luke.